Retail traders worldwide are turning to ETFs to get access to what they want the most. That is U.S. tech stocks. I'm talking NVIDIA, Palantir, Coinbase, Tesla, MicroStrategy. Since the SEC approved the first single stock ETFs in July 2022, this category has exploded. There's 60 single stock ETFs now trading in the U.S. Combined assets, $18 billion. Mostly long versions that trade with 2 times leverage. So let's talk with Will Ryan, founder and CEO of Graniteshares. He runs the whole thing, the largest single suite of single stock ETFs. Your NVIDIA 2X long ETF. This is the big leader. What, $6 billion in assets? Congrats. Tell us just who is owning these and what are they doing with them?
The key is the word you just mentioned, worldwide. This has become a worldwide phenomena of everybody from retail traders or retail investors through to the largest, most sophisticated hedge funds, proprietary trading firms, and institutions in the world. So when we think about this, it's much more about global and global audience.
Well, most of the money going into ETFs, I mean, we had record year last year. It still goes into plain vanilla index funds. But there is this increasing retail component I keep seeing showing up in terms of flows. They want to trade volatile tech stocks despite the fees and the risk. You call it retailization. Who are all these international people that are buying all this stuff? Explain this a little more.
Yeah, so this is, again, a global phenomenon whereby if you think about it from a super high level, you've got investors in markets around the world, Asian markets, which perhaps haven't performed very well. They're looking to the U.S. market. They're looking to Tesla. They know Elon Musk. They know Tesla. They know NVIDIA. They're trying to get access to the same kind of performance that U.S. investors have enjoyed. So it's coming from global markets, and single stocks are really the phenomenon.
So there's 2 objections to this. We've gone over this many times to these products. First, you have very high fees. That's a major problem. You're charging over 1% for this right now. And the second is this daily reset. So investors holding this more than a day don't necessarily get the leverage or inverse coverage indicated. And how do you respond to these objections? They've been around for a while, and they're very persistent.
Yeah, I mean, the fees are very inexpensive when you compare it to the cost of owning margin in a traditional brokerage account. The fact that these are short-term products, they're not long-term buy and hold, means people are paying less than 1 basis point, well under 1 basis point or 1/100th of a percent per day to hold it. In regards to the reset, the counter to the reset is you get 2 times leverage every day, and you don't get margin calls. A lot of people lose money in traditional leverage investing because they get margin called. These don't have that.
Yeah, and this is what's driving, by the way, all of this interest in 24-hour trading, specifically 24-hour trading of U.S. tech stocks. That's what we're going to be talking about. Much more about this is coming up on the increasing growth of the international investor and demand for U.S. tech stocks. That's what's behind all this. That's coming up on the ETF Edge. 1:10 p.m. Eastern Time. We'll be joined by Ben Johnson. He's the head of client solutions over at Morningstar. It's a fascinating topic, global growth of ETF and tech stocks. That's etfedge.cnbc.com.